All right, we're going to talk about Fidelity. This is the GameStop trading trading chart. Just to check in really fast, this thing crashed into the after hours and looks like it's holding at support. So this is a killer entry as far as I'm concerned. And this is not financial advice, and I have no affiliation with Fidelity or any of the other platforms or brokerages or anything that I'm going to talk about. But yeah, you need to talk about Fidelity after hours. It's the only freaking trading platform that has good after hours and was one of the ones that didn't halt trading during the fiasco. So I just wanted to take a look at what's going on. Take a look at the chart. This is Brian Lewis with MMT Investing, and things just changed. Yeah, so the GameStop crazy fiasco. I was in the wallstreetbets forums today, checking out what's going on. And the main thing that they were pointing out, well, they're talking about the bots are like spamming and putting negative sentiment and making fake posts. They're like constantly deleting posts. Like the silver squeeze posts are fake stuff that they deleted. It's not coming from them. I don't know if that's like fake news from media or if it's just like a different short idea that's been around a while that someone brought up. But it has blown up, and this is the squeeze. GME GameStop is the squeeze. The silver thing, I don't know. That's a different topic, but I wanted to talk about, well, the chart. So, I mean, we had this crazy action and everyone's freaking out and saying that there's all kinds of insider trading and whatever going on. And this looks like a very standard volatility zone on a bubble trend line to me. And this looks like a completely standard support zone on a bubble trend line to me. So I'm not saying whatever did or did not happen, but like nothing here looks crazy weird. This looks like a pretty typical bubble chart. I mean, we have a little bubble here, and these weren't little bubbles at the time. I mean, this is a big freaking bubble. Look at this, is nutty. Like this is what a short squeeze looks like if you can see how high it went here, and you can see how the volume is blowing up. You can see here again, there was another squeeze here and comes back down to the trend line and holds, and then it blows up into another one, and each time it's bigger and bigger and bigger. So the next one should be bigger. This does look like a short squeeze bubble trend line. Yeah, so yeah, the outstanding short percentages I think it's about 50%. So there's still a lot of shorts that have to get closed at a horrible price here. And it's after hours, so you can't do any kind of call options or anything on this. But yeah, in the Reddit threads, the big thing that they're pointing out is that the volume is crazy low. So there's no shares being bought or sold. So there's no way that they're closing out all their positions right now with no volume. Like this is a monstrous hedge fund. If they go and close out a bunch of positions, like the volume does this stuff, like goes freaking insane. Like the volume, if they closed out 50% of outstanding shares, the volume would be this much or bigger. And you would notice it. Like it would just freaking blow up. You know, it goes 2x, 4x, 10x, something depending on how many, like what percentage that they're closing out. Anyway, this is the support zone that I was talking about earlier. And I just bought a pile of shares here. I can't do any kind of call options. They're really expensive, and you can't do them after hours. Like the premiums on the options are really dumb, but I might do it anyway because it levers up. Like when you do the call options, it's like 100 shares worth, and then when it starts moving up, the gamma squeeze thing, the market makers have to buy. The closer it gets to your strike price, they have to buy all those shares, like the 100 shares that they need to cover your option. So that's like when there's a ton of call options open, that's what like really like exponentially doubles down the squeeze. When they have to close shorts and it starts climbing and there's call options open, it just like blows up. So I wanted to talk about Fidelity. If I can get my screen to tab. How do I do it? How do I do it? Oh, this one. There. Oh, this is E-Trade. So this is the option screen on E-Trade. So you can go, just for example, if you're looking at an option, which you can only do during the day. And E-Trade was one of the platforms that shut down during like the end of the second half of Thursday. I was trying to buy call options. I couldn't buy call options on Thursday. But you can see you just pick call, buy open, and then you have to pick when the call option expires. So like 1 week will be the least expensive, but if it doesn't go up to your price by the end of the week, then this thing's worth 0. So you can do a week, or you just try to figure out when you think it's going to explode, and then probably go longer on the time or something. It's really tricky with call options because you have to time it perfectly, and you have to pick the price it's going to. So like you really have to guess correctly. But if you do guess correctly, you get paid a ridiculous like 100x return. And then you pick the price that it's going to. And so the gamma squeeze thing is they keep adding new call options as it gets more ridiculous. And they have strikes at 800. So you can call to 800, and you can see the prices over here. Let's see what they look like. So you can see as you get farther away from the current price, further out of the money, it just gets cheaper and cheaper. Like this is the price of the contract. It's like buying insurance, and this is a cheaper insurance policy because it has to get way farther away before it would pay out. But if it did get to that price, and you can see like it's sort of like eBay or something on here. Sometimes the contracts aren't available and they have weird prices. You have to like flip through and find a good price and buy that contract. Like individual people can write these, or anyone that wants to. So I mean, like obviously a 740 strike at 13 is a terrible deal, but maybe like this one's pretty good for way out of the money. And then that puts the gamma squeeze pressure on the stock. And then if it blew up past 800, you would have the insurance policy premium of the remaining time. Plus, it's like having 100 shares at 800. It's like you bought 100 GameStop shares, and then you're selling them above 800. So you would get the difference. And so it's like 100 shares of that huge difference. And all you have to pay to put the trade on is, these are going for like 7. So it would be a $700 option, like an insurance policy that you have to pay. That would be good just until February 5th for just a week. And it would have to go over 800 this week, which is like kind of insane. But if it went to 1,000, then you could sell to close at 1,000. And then that would be the difference between what it is right now and 1,000 for 100 shares, plus the remaining value of this insurance policy. You can sell it. When you sell to close, you sell it to the next person. And so you basically get all your money back on the policy, plus the difference of 100 shares. So yeah, it kind of pays out like exponentially if you're correct. But most all out of the money call options expire worth 0 because it just almost never happens. But this is one of those rare cases where it's like supposed to happen. So if you get it right, you can make a mess of money. And then if you go out farther on the strikes, it gets more expensive. You can see if you go out like a month or something, it's not $700. It's like something like this. It's like 11,000. So you have to pay for the time, and you have to get the timing right, and you have to get the height of the move pretty close. You can sell the option if you're close, but if it expires, it has to expire above the number that you picked. Anyway, that's E-Trade, and I don't like them as much now that they froze trading on Thursday. But I do really like their options trading setup. It's yeah, I mean it works fine, and they have good they have all the normal stuff for like option trading. for like industry people and individuals. And this is Fidelity, um, just so you know, I'm putting my money where my mouth is. I just grabbed a pile of these shares. I was just buying a bunch of them when it got down near that support line around 180, and I got 34 so far. It's still kind of bouncing on that support line. I might grab some more. I think I threw yeah 9,000 into this account. So I almost bought the account. I almost bought it out already. So if that does turn out to be a bottom support line on this thing, then that would be a pretty cool spot to buy shares. But these are just normal shares. These are not options. And so this is Fidelity. And yeah, I wanted to talk about Fidelity because like you have to open a Fidelity account. You have to get all of your information cleared. You have to deposit funds. Then you have to go into the screen and ask for option trading ability. You have to go and ask for, there's a like a settings area. You have to go and turn on aftermarket trading is really important. Like that's how I was able to get these shares right now, is because of Fidelity. It's like aftermarket until 8 o'clock. It has really late aftermarket, which is really cool. And yeah, anyway, that's not a promotion for Fidelity, no affiliation or anything, but if it's one of the ones that didn't go down and it has good after hours, and a lot of people in Wall Street Bets were saying to do Fidelity, so I went and opened the account Thursday as soon as all that stuff was going on with E-Trade. I'm like, screw this. I opened a Fidelity account and moved money. But yeah, I guess the other two is Vanguard and TD-Ameritrade that did not go down during the volatility. So those ones are good. I don't know their after hours or options stuff, but I mean, they're both big brokerages that didn't shut down. So I think those are probably also good options. And then obviously, screw RobinHood. Like I never liked RobinHood. I have videos from months and months ago saying that RobinHood is a super high risk thing, that they like giving your information away ahead of your trades, that they can't be trusted. I said all that stuff a long time ago, and I said I'm never getting on that platform. And this is exactly why. I'm not surprised this happened one little bit. What's next? This is thesqueezesquoze.com, and this is one of the big guys on Wall Street Bets that tracks the short interest. And yeah, the squeeze has not been squoze as of February 1st. And this is brand new today. Public service announcement. This is not a game. The people who originated this meme like to have fun with stupid stock bets. We like to pretend we're monkeys throwing darts. But though we enjoy talking like idiots, we actually do know the difference between delta and theta. We understand the role that a clearinghouse performs. We were playing the GME weeks ago when it was in $10 to $50 range, and it became clear that deep effing value was actually right. And we put in money that we could afford to lose because we knew that we were speculating on a potential short squeeze. If these statements do not describe you, if you don't know option Greeks, if you don't understand how the market works, especially if you're gambling with money that would cause you problems if you didn't have it anymore, then pull your head out of and return to the real world, to your obligations and expenses. Do not increase your exposure anymore. There's an emotional high in gambling, especially when you're doing it with lots of other euphoric people. Don't let this screw up your life. This is not an epic crusade to get retribution on the financial sector for its reckless greed and damage it's done to people's lives. This is just a stock play undertaken to make money off some hedge funds who got caught in an overexposed position. The financial industry as a whole does not care. This is just a blip on the radar. Anyway, here's the update. Yeah, he wrote that whole thing this morning. And then here's the short interest from a couple people. S3 Short Site, which people are saying they don't trust anymore for a couple of reasons, is reporting 53% short exposure. And Ortex is reporting 58% short exposure. So there's a giant pile of shorts they still have to close at a high price. And it could get ridiculous. And yeah, this is just explaining. Yeah, just go here if you want an explanation of how the short squeeze works and kind of the philosophy of it. and the short interest links and stuff are down here. Anyway, this is the squeezesquoze.com. Yeah, so it's a pretty cool one that can kind of look at. And then the other thing, Deep Effing Value posted his account again today, and it was minus like $13 million on his options from the peak of the thing when he posted it last time. But he's still holding the account. He's still there. Everyone else in the Wall Street Bets is not saying they're not going to sell their stock. So this thing is pretty crazy. It's still on. And yeah, Fidelity is what I'm using now to buy normal shares, but I'll be buying options on E-Trade during normal hours if they will let me. Probably tomorrow if it stays down. If it stays down on the trend line, I'll probably get some options tomorrow. But that's what's up. Yeah, please hit the like button. Check out the playlist. I have all these videos in a playlist if you want to flip through several of them. And then, oh wait, no, I don't. Do I? I should, yeah, I'll make a playlist for the short squeeze stuff. And yes, and then you can check them out. Yeah, I think that's it. Cool. So yeah, happy trading and all the things.